Welcome traders to a new video here on the Price Action Volume Trader channel. If you are new, make sure to subscribe, hit the thumbs up, and check out all the links in my description. I got a ton of content, so you can find a lot of playlists and information down there. Today we're going to talk about the topic of trade entries using order flow, spotting, absorption in the footprint chart. Now this is one of the basic setups in its most raw form that I teach in my day trading with order flow and volume profile course. I go in there in a lot more detail, plus I talk about all the confluence of a lot of other volume profile and price action factors that go into my trade decisions. But I thought I would share this with you all here since I get a lot of questions on this, and I know there's a big interest in footprint chart videos as I've seen from my past YouTube videos. Okay, check out, there's already about 2 or 3 footprint videos here on my channel. You can search for them. So today, what is the topic we're going to be talking about? We're going to be talking about how to take or spot areas to operate in using the footprint chart in order to identify areas of high volumes where absorption could be taking place. So what do I mean by that? Well, let's say if a market is trending down and then suddenly we have a reversal and I spot an area on the footprint where there's high executed volumes at this low. Especially I want to see high volumes with a negative delta near the bottoms. As you know, delta is the aggressive buyers minus the aggressive sellers, so executed orders to sell minus executed orders to buy. So if you have a negative delta, that means that there's more aggressive sellers, positive delta, more aggressive buyers. So if you're here, let's say this market is in a downtrend, and this is specifically focused mostly on lower time frames. I use this when I'm day trading, specifically the ES, the SP 500 futures. And for short-term levels, this is what I like to use in order to just spot opportunities to trade on the lower time frames. So market comes down. If we identify an area where there's suddenly more volumes than normal being executed, and we identify sellers that are being aggressive, getting absorbed right at the bottom, and then the market reverses, a lot of times market is going to revisit this area of high volumes before eventually continuing in the reversal. This setup, it works for both reversals and continuations. I'm going to go over a few examples on Sierra chart, but this is the basic premise. It's just as simple as that. You just want to identify higher than normal volumes on the footprint chart, but location is important. You want to identify them at levels that you know are important support or resistance areas, because that means these levels are getting defended by big passive players. In this case, they will be absorbing all the aggressive buying to load up their longs and then push this up. Okay, so this is TradingView. We're not going to use TradingView for this, but I just brought it up just quickly just to annotate and talk a little bit about the setup first. But for example, areas like this, I'm not sure if this happened here because I don't have a footprint right now, but let's say market is coming here. We made a lower high and now we push lower. In situations like this, I'll go on my footprint chart because it is very common that probably around this areas up here, we're spotting high volumes of aggressive buying absorption going on. And then once market breaks down, you can see here we break this swing low, we shift market structure. And the mistake, and I'm guilty of this, I do this sometimes as well, and this is why it's so important to have your trade set up pre-planned and to be patient for your best signals. In this case, a lot of people see this and they just start shorting right here because they think this is just going to go through. But then if you look to the left, you're at a big support level here, and then a lot of times we get this market just reverses back to these areas just for one last retest before eventually just going down and continuing. So what I'm going to show you is how once you spot these things, you want to be scouting these areas for a possible entry to go in the new trend or the market shift direction. So let's go into Sierra chart. I'm using here a 3000 tick chart in the ES SP 500 futures. This is the time frame I like to use. I use both a 3000 tick and a 5-minute chart. I have them both open on my screen, but this is my main focus because I have a whole video on this on YouTube that you can find just by searching for tick charts on my channel. What I like about tick charts is it filters out a lot of the noise, especially when there's a lot of volume activity. So for example, here, this is regular trading hours from 9:30 a.m. when regular market opens to 2 p.m. This is the same period we have right here, but look how much more detail I have on the tick charts versus the 5-minute charts, because the tick charts, what it's doing, it's showing me in this case every 3000 executions, whether to buy or sell, no matter the contract size. It can be one contract or 500. Every time there's an execution, that counts as one tick. Every 3000 executions, it makes a new candle. Okay, so I get a lot more detail by looking at tick charts than I do by looking at a 5-minute chart. Okay, so that's why I always like to focus on tick charts. But again, you can do this on a 5-minute chart if you want, but in general, your candles are going to be a lot bigger, and so you're not going to get that granular data. You can even use a volume chart. This is a 3000 volume chart, and you can see it's very similar to the tick, but the volume actually has even more candles than the tick chart, because this is just measuring total volumes traded per candle, not total executions. But overall, you can see both of this are very good if you want to look at things in more detail. Okay, so let's go right here, and I'm going to go over last Thursday's and Friday's market. You can see I have 5 areas marked off with light blue rectangles, and this is the areas that I'm going to talk about in the video just to show you the basic premise. Okay, so now let's start off with the first example. Before we go into it, I'm just going to briefly show you how I have set up my footprint chart. Again, this is Sierra chart, but any platform that lets you use footprint usually has these options. I have it set as volumes on the left and delta on the right. So executed aggressive orders to buy minus aggressive orders to sell will give you the delta. So if it's a green number, that means this was a positive delta, more aggressive buying than selling. And then if it's red, there was more aggressive selling than buying. And on the left, I have the volumes. So I'm not going to go through this in detail. If you want, you can just pause the video and check out the screen to look at all this. But basically, I have the volumes set so that it gives me 2 highlights. It gives me purple highlights when I have a medium set volume, and orange when it gets a high volume. This is completely subjective, and this changes a lot the amounts. If I go down here, you can see this is the thresholds that I'm currently using. This is for S&P 500 3000 tick chart during regular market hours. So any volume above 1000, it's going to highlight purple. Any volume above 1250 is going to highlight in orange. This is total executed volumes at each of these tick levels. Okay. And the way I use that for is that it just helps me visually a lot easier to just see where we are getting into high volumes. Okay, but please, don't message or start asking, what the settings should be for NASDAQ, for crypto, for Forex futures, for gold, etc., because this is very specific to the market that you trade, the time of day, how much volume volatility there is. Basically, I'm just setting a filter just to help me visually see things, because I could use this without this, but then I would have to manually be looking at all the numbers. This just gives me a little shortcut where I can just easily see where there has been large volumes. Okay, so we're going to focus on this first example that we have have right here. And if I quickly maximize the window just to see the conditions of the market that we were in, you can see this was a very wide-ranging day. We were making swings of, over 40-point swings in here in the first few hours. So very volatile day. And then right here, we have a swing high, a higher high. Then we broke market structure down. All these swing lows were broken. This is a very quick liquidation break right here. And then we start grinding back up right into a very nice over-under pattern. You can see this is also the top edge of a high volume node. And this ended up being the value area high for the day too. So once market is coming back around this previous area, I know that there's some significant resistance to overcome right here. So this is where I'm going to go and focus on the footprint to see if I can spot any kind of buying absorption to look for an entry. So if I go into my footprint now, you can see the market is coming up, and right on this first stop right here, you can see we get a high volume print with a high volume and very large negative delta right over here. Okay, so we just got a lot of selling coming off on the first one. Then the market pushes away. This is when I start paying attention. Then you can see on the second stop right here, again, we have a lot of significant more volumes. If you see all these numbers, they're all around 300s, 200s. There's like a 500, 600, but overall they're pretty small. But then here you get 1100, 1286. So you're getting a lot higher volumes coming in now right into this previous resistance area. And then here, market falls back down, and then this is then when you can start scouting for entries. Okay, so now this whole blue area, we've spotted it as an area of big volumes that are absorbing. There's just a lot of activity and rejection in this area. And like I said, a lot of times you would see this coming down, and then people start trying to short this going into VWAP, and then they just get a quick spike back up just to stop them before it reverses again. So like I said, markets tends to revisit these areas, as we can see right here. So then this could have been a great entry area right on this retest back into here. And the nice thing is that once you spot the high volumes, then this is where you want to protect yourself. So in this case, you have a stop loss right behind the high volumes, and then you get a nice risk reward entries right over there. Okay, let's go into the next example right here. This is later on in the day. This is close to 3 o'clock during the last hour of the pit session. And you can see same here again. We come down. There's clearly a trend down, but that doesn't mean you could scalp some quick long positions, but obviously those are less likely to yield you a very high trade. So in this case, you can see we had a resistance, we broke down, but then down here in this whole area, look at all the high volume highlights that I have now here. Just a ton of high volumes, and most of them are green. You can see most of all these highlights are for green volumes. So that means there is a lot of high level of buying and holding of price at this level. You can see delta is still highly negative going here, and all this negative selling here is getting absorbed. Here you can see from the cumulative volume delta. And then right here we have the push up right into resistance, and then the pullback. And so on this pullback, this will be a good entry right here. Like I said, you spot the high volumes, market pushes up. In this case, we break above this previous highs that we had here, and then market comes right back to retest the high volume areas, and then we have another pop. Now, like I said, we're in a big downtrend, and we still have this area of supply. So right here, your trade would not have yielded a ton. and you can see we actually get some high volume absorptions on the short side, meaning a lot of aggressive buyers are getting caught off guard here, and then market is reversing at that point. Okay, so that's the second example, and let's move on now into Friday. Okay, so let's just push this forward and go into the Friday morning session. You can use this on any time frame at any time of day, but definitely if you're trading regular market hours when there's a lot more volume activity and more movement, then it is a lot better conditions to trade in. Okay, right here we have same thing again. We had the market open, push down, and then we start pushing up here. And you can see we have 3 pushes, and then this market broke down. So if we go and focus on this area, you can see right on this very first push, we get very high volume absorption to buy. We start coming down, and this is why I said, this is not pinpoint perfect, because we did come back up and trade through this high volumes. So if you would have tried to get short right here with your stop right behind, you would have gotten stopped out there. But then we have another attempt and more high volumes right here on the top. But then right here, we have this move down. We break market structure to the downside. And now this third pullback, this is where you can really look then for your setups. And in this case, this is your general high volume areas. So then you can look to get in short on this third push with a stop right beyond the high volumes that you had over there. And then you can see in this case, we've already shifted structure here on the lower time frame, and then market just continues to push down. Then we have a little example of a continuation, which we have right here. In this case, you can see market was pushing up. We got high volumes of absorption here on the top. So you can see this candle, high volume highlight right at the top of the wick right here. Then market reverses, and then we start forming this. You can see this looks like a little miniature descending triangle. There's a lot of support of aggressive selling at 42.69.75. And, you have 1, 2, 3 straight 3,000 tick candles with high delta volumes to sell. Market is not budging. So that means there's a very large passive buyer that is setting limits to absorb all this selling. But eventually, in this case, this trader probably gave up and just closed or pulled off his positions, and then we just get a very quick liquidation break to the downside, and you can actually see the same thing happen again here. Again, a big level getting supported here, high volumes of selling to the downside getting held up right over here, and then eventually they do break down to the downside. Doesn't always mean that if you see this, it's just going to break down, because sometimes what happens is you see this and you're betting that it has to go down, and you just start trying to sell the bottom of this, and then this can just reverse. But again, context is key. We are looking at this coming off of a very significant swing high. So this is a lot more conviction on this. If we saw this near a swing low, then this is definitely a sign that aggressive sellers are getting absorbed to possibly reverse. So context is very important. Also looking where we are in relation to our session volume profile, etc. And then the last example, this was at the last hour of trading on Friday. We had a very bearish close. So trend is down. So the higher conviction trades are to the downside. And we can see this example right here. We have the first push up, a lot of aggressive buying near the top of the wicks here. We broke this support and we're now coming back to retest, and we're getting a lot of aggressive traders getting trapped. We push down here, come back up again. Here we don't really see much high volumes in this test, but then we break down, and then right here on this one, again, we see high aggressive volumes getting absorbed. So right here on this candle, you could have just sold right when this candle closed and we started breaking down, and you know that your protection, your stop loss would go right beyond the high volume node area. And then you get even one more chance. If you hadn't gone in on any of these ones, then let's look at what happens on this last one. If we look at this area right here on this retest, we come right back up into this previous area of buying absorption that we had right here, and we test this level perfectly before just continuing on the trend lower. Okay, so that's pretty much the basics of the premise. Again, what you're going to try to do, and this is just one of the many elements and factors that I take into account on my trades, but basically what you're looking at is a significant level of support and resistance on your charts. Then you go into your footprints to look at this more granularly. It can be on any 5-minute chart, 1 minute, 3 minute. I would say this is much better to use on shorter time frames for day trading, and it works on any market. And again, all you're looking for is identify areas of high volumes of traders getting trapped on the wrong side, and then let market come back into these areas and look for entries with the trend. Okay, so that's pretty much it for the video. Thank you all for tuning in. Hope you're having a great week, and I will see you all in the next video. Don't forget to subscribe, thumbs up if you want more content like this, and check out all my trading courses in the description. Take care.